WallStreetBets Reddit versus hedge fund drama explained. Hello and welcome. Our goal at Girl Investors is to help you become smarter, better investors. Do you want to understand the drama behind the WallStreetBets Redditors and Wall Street hedge funds? Do you want someone to explain all the financial jargon to you without going into excess detail? If you answered yes, then you've come to the right place. In the last week of January 2021, you might have heard terms like Robinhood, GME stock, Citadel, Melvin Capital, WallStreetBets, and short squeezes and shorting, and thought to yourself, what on earth do all these terms mean? In this video, I will break down the major details of this David versus Goliath-esque type of story and major events that transpired in the last week of January 2021 and leading up to that date. I will explain the confusing jargon, including shorting and short squeezes, and in an upcoming video, we will talk about how hedge funds make money. If this sounds good to you, then please keep watching. Don't forget to like this video and subscribe to this channel. Grab a drink, get your notebooks ready, and let's get started. The players. The players are WallStreetBets, GameStop, Robinhood, and Melvin Capital. WallStreetBets, the group WallStreetBets, also known as WSB, is a long-standing subreddit channel where over 3.5 million Reddit users chat about highly speculative trading ideas and strategies. This Reddit community will be known as retail investors, or people like you and me. And boy, did these retail investors cause seismic disruption to financial markets, particularly in the last week of January 2021. GameStop Corporation, or GME. GameStop Corp is a U.S. or United States publicly traded company listed on the New York Stock Exchange as GME. GME, or GameStop, is an American brick-and-mortar gaming company that sells video games and consoles, amongst other things. The stock price ranged between $3 and $10 for most of the past 12 months. However, the price started to slowly increase towards the end of 2020 and was hovering steady between $19 and $20 up until mid-January 2021. The GameStop stock closed at $325 on January 29th. This type of price increase is highly unusual, and we might even characterize this as a gamma squeeze. Robinhood. Robinhood is the brokerage. It is a free trading app that lets investors trade stocks, options, exchange-traded funds or ETFs, and cryptocurrencies without paying commission or fees. There are no account minimums. Robinhood is not the only broker offering free trades, but it was one of the first. Robinhood is one of the few brokers that gives investors the opportunity to trade cryptocurrencies. If you do not know what a brokerage is, then please check out our video on financial intermediaries. I'll leave a link in the description box below. Melvin Capital. This will be our institutional investor in this story, although there were other involved, such as Citron Research, but we'll just focus on Melvin Capital. Melvin Capital Management LP is a registered investment advisor founded in 2014 by Gabriel Plotkin, the firm's chief investment officer. This institutional investing company is also known as a hedge fund. This hedge fund uses a fundamental research-driven process to identify investments employing a long-short equity strategy. Institutional investors like Melvin Capital and Citron Research were short GME, and we'll explain what shorting means in just a bit. The hedge fund's thesis was that video gamers will eventually shift from physical media to digital downloads, and the demand for brick-and-mortar gaming locations will decline. And the COVID-19 pandemic only fueled their thesis. The timeline. So now that we know the players of this story, let's look at the timeline of events. Summer 2019, Keith Gill, a 34-year-old chartered financial analyst, or CFA, from Massachusetts, US, also known as U Deep Bleep Value, purchased around $53,000 in call options on GME. Gill shared his investment thesis on our WallStreetBets, or the Reddit WallStreetBets, and provided regular updates on his performance, including the times when the investment had plunged. In September 2020, another Redditor with the handle Player896 published a post titled Bankrupting Institutional Investors for a Dummy, featuring GameStop. Player 896 was also long GameStop, meaning he predicted that the business would actually grow revenues and the share price would increase, even though technically the GME stock had been steadily declining since 2015. Player 896 noted in his post that the GameStop stock was being heavily shorted at the time by a number of institutional investors, including Melvin Capital. On the 11th of January 2021, co-founder of GameStop, Ryan Cohen, who also happens to be the largest institutional shareholder of Apple Inc., joined the GameStop board along with two former associates from his pet health products company, causing the stock price to increase to over $30 by the 13th of January. And even after Ryan Cohen joined the board, Melvin Capital and other hedge funds continued to short sell the GME stock. The Redditors interpreted this as market manipulation by these rich hedge funds where they coerce average retail investors to panic sell their stocks. Player 896 and the WallStreetBets Reddit community decided to fight back against these manipulation tactics and create something called a short squeeze. Defining shorting and short squeezes. I think now is a good time to explain shorting and short squeezes. Short selling or shorting is when an investor bets on a company's stock price to fall, and usually they will have a fundamental or technical reason for betting that the stock price is going to fall or drop. An investor is essentially borrowing shares from their broker, also known as margin or leverage, and then will sell the stock, and then will purchase the stock back and return the shares back to the lender. The short seller will profit from the difference between the selling price and the purchase price of the shares. Short selling is, if you haven't noticed, is considered a high-risk investment strategy. But you know what? Let's do an example because I know this shorting jargon will seem esoteric for some of you. So suppose that XYZ stock is currently trading at $20. And after doing some research on the company and due diligence, you believe that XYZ stock could fall to $5 a share. You will then contact your broker, such as Robinhood, and Robinhood will lend you shares of XYZ stock that you will then sell in the open market. In this example, suppose you borrow 100 shares of stock. After selling those 100 borrowed shares in the open market, you now have $2,000 of cash in your account. Remember, though, you have to return 100 shares to your broker, Robinhood. If you were right, and XYZ stocks drops to $5 a share the following week, you can now quote-unquote cover your short position by buying 100 shares back. And in this case, you only have to buy back at $5 a share or pay $500 for those 100 shares. And then you return 100 shares of XYZ stock to your broker Robinhood and profit the difference. So with 100 shares as the example, you as the investor would profit $1,500 shorting XYZ stock that fell from $20 per share to $5 per share. But what if you were wrong? Suppose the XYZ stock rises to $35 instead of falling to $5. Remember that you have to return 100 shares to your broker Robinhood. Now you will have to purchase 100 shares at $35 or pay $3,500 in order to return the shares. That means now you are in the hole $1,500 for shares that you don't even own. A short squeeze is when buyers flood the market by purchasing a particular stock. This action then drives the price up. In this situation, short sellers are squeezed such that they must cover their short positions very quickly and sell at a loss. So let's get back to GameStop. Retail investors incited by WallStreetBets Reddit chats flooded the market to purchase millions of GME stock, which resulted in short squeezing all the hedge funds like Melvin Capital, who were short GME. And when prices rise dramatically within a short duration, it can cause shocking losses for the short seller. And what's even worse is that because short sellers are forced to buy back into GME when a short squeeze happens, it actually drives stock prices even higher. January 11th, stock price for GME was $19.94 US dollars, with a 15 million volume traded. The short squeeze picked up steam with retail investors buying up GME stock. And by January 27th, the short squeeze reached epic proportions. The stock price closed at $347.51 USD. And also on January 27, 2021, Keith Gill's position in GameStop's stock is now worth $48 million US dollars. And also on the 27th, Robinhood and other brokerages halted retail trading for at least 3 times during the day. This action basically infuriated the retail investors. Some speculate that this halt was because hedge funds were pressuring Robinhood to stop trading on the stock. On January 29th, Reddit WallStreetBets was the fastest subgrowing subreddit and the community surged by more than 1.5 million users to 6 million members, in a short period of time. Also on the 29th, GME stock price closed at $325 US dollars. Cohen, who was probably already wealthy, is also much wealthier than he was, similar to Keith Gill. Take a look at the video here where we can see the stock price rising along with the trading volume. More squeezing. The WallStreetBets traders also short squeezed BlackBerry, AMC, Nokia, and Bed Bath & Beyond. Those companies reported 24%, 310%, 70%, and 46% respectively gains on the 27th of January. In fact, there was so much trading activity that Robinhood's platform suffered outages as well. So what actually happened to Melvin Capital and Robinhood? Melvin Capital closed its position in GME and was given a $2.75 billion bailout by 2 other hedge funds, namely Point72 Asset Management and Citadel. The future of Melvin Capital at this time is unknown. Citadel also executes trade orders on behalf of Robinhood. On the 29th, the CEO of Point72 Asset Management also closed down his Twitter account after getting mobbed or attacked by the Twitter mob for bailing out Melvin Capital, in addition to his possible role in convincing Robinhood to halt trading of GME. To that end, Robinhood is facing at least 2 class action complaints. The claim accuses Robinhood of manipulating the stock market by depriving retail investors the ability to invest in the open market. Evidently, on the 27th of January, Robinhood halted GME stock 3 times within a day. Robinhood restricted only to selling and even sold without their clients' consent. These actions led to outrage. So there you have it, the GameStop story explained. I might have missed a few details, but I think I explained the gist of the situation in this video. Watch the video again or find other articles to read if you need to remind yourselves about the mechanics of shorting and short squeezing. Leave a comment below on your thoughts about this entire drama. If you learned something, please like this video. As always, thank you for watching and subscribing. Here are some videos for you to watch next, and we'll be back very soon with another video. Thank you for watching. I'm Rosalind, and bye for now.